relax. Let the music take
Sounds good. Sounds good.
All right. Nice. Now we're all in the right groove of all those good things. I'll make sure to tag artists when we post it on social media. So, before we get started, I want you to do something for us. Something very small favor. I want you to click that subscribe button. It's probably down here, right down here. So click that subscribe button. And you know what? When you're clicking that subscribe button, also hit the notification bell so you're always notified wherever we drop a new video. Please take your time. I can wait. All right. Thank you guys for doing that. All right. Now, welcome to episode 16 of Real Talk with Coach Q and
Broker West.
Yes. Now, if this is your first time catching our show, I'd like to do a quick introduction. My name is Qierre McGlory. I am a realtor. That means I get the opportunity that I'm grateful to help people buy, sell, and invest in real estate. And I also get to coach agents to help them build successful real estate careers. And now I'm going to let Wes share and let you guys know what he does. So, Broker West, break him off something.
Hey, it's West, y'all. You know, it's me, Broker West, and I am the mortgage wizard, the money man, the bringer of rain, the breaker of financial chains. And I'm here to give you all as much information as possible so you understand all your options for financing. I'm giving you the true mortgage insider's look. So welcome to the show.
I love that. All right. Now, without further ado, what we like to talk about is leadership next, because Wes and I are true believers in leadership and really helping ourselves grow, knowing that there's never a limit in terms of the way that we grow. And today, I'd like to share with you guys education. This is something from my mentor, John Maxwell. Now, Wes, did you know that over 60% of people that graduate from college with a college degree stop reading books after they graduate from college?
No, but it doesn't surprise me.
Yes, yeah. Over 60% of people that go to college, get a degree, stop reading books, right? And the industry that Wes and I are in, you're actually required to continue your education. Yes, I have my real estate license allows me to help people buy some that's real estate. Wes has his mortgage license as well as his broker license, which allows him to help people buy some real estate if he wanted to, but he's a broker and it gives him more of an options of shopping better rates for his clients. But we have to do something called continuing education. So we always have to continue education to make sure to keep our credits up to date, as well as our knowledge of how we can better help our clients. Now, Wes and I also make sure to learn, about the market on a regular basis anyway. So not just the continue education stuff. And the reason why I'm sharing with you guys the importance of education is because, the thing is with life is a journey. Life is a continuous journey. So you want to make sure that you're always taking opportunities to educate yourself and learn. I mean, I know a lot of people that are smart that may not have a college degree, but they've been able to continue to learn and they've still been able to progress in life. Very successful people I know that have graduated from high school, got their high school degree, and yet they still continue to read books, take classes, and may not have went the college route, and they're still doing well because they continue to educate themselves. So what I want to share with you guys is always be a forever learner. Always continue to educate yourself because once you get that degree, yes, it's nice to have a degree, but if you're not continuously educating yourself and bettering yourself and making that your degree, your expertise sharper, then you really fall behind the curve. You start to plateau. So that's what I want to leave you guys the message today. Continue to be lifelong learners. Now I'll let Wes share about that, the philosophy of education.
Yeah, whenever I think of the word education, it reminds me of one of my favorite quotes by the author and comedian Mark Twain. He said, I never let schooling get in the way of my education. And that is such a powerful thought because people think that schooling and education go hand in hand, right? And that means they also think that the only place you get an education is at school or when you're in school. So that's exactly why it doesn't surprise me that college graduates stop reading when they get out of school. They think their education is done because they got the piece of paper, they had the experience, bought the t-shirt, we're good. But no, you should always keep educating yourself and understanding that education does not lie in a building or a classroom or with the professor. There's a lot of great books in the world. I got so many books I can't even get to them. Okay. And I read all the time. And I'm like, man, I got to hurry up and finish this book so I can get to the next one. So yeah, if you're educating yourself, you're continuing to grow. Don't stop growing, because there's another option when you stop growing, and you don't like that option.
Yeah, absolutely. All right. Now we move on to the main event. So I want to talk about something that's been added when it comes to qualifying for a loan. And I'm going to let Wes talk more about how rent can actually help boost your credit score. So Wes, tell us more about that.
Yeah, so let me be clear. So it's not even actually about improving your credit score. So what it is that Fannie Mae, which most of you are probably familiar with, you have Fannie Mae and Freddie Mac. Those are government supported entities that are running around creating all the guidelines for people to get financing outside of government types of financing. And they're also the ones buying a lot of the mortgage-backed securities that are keeping rates low and making the market move, right? So what they're doing is they're now creating an opportunity to allow your rental history to assist you with qualifying for a home loan. And I think this makes a lot of sense. And I always thought it was unfair. I would say unfair to potential home buyers that your rent is never considered. Because as I always tell people who are buying a home, the biggest portion of your monthly budget is going to go toward your mortgage. Well, that's still true for people who are renting. And if you're in Southern California like we are here, in a lot of cases, your mortgage payment may be about the same or maybe even less in some weird instances than what your rent payment is. I've had many clients who are paying $3,000+ a month in rent. And so if that person can make that payment every month and do it on time and have a good track record, they deserve to get the credit for that. So here's how that process actually would work. So normally we run an automated underwriting system. Once we have your mortgage application, we process it through what's known as desktop underwriter. That is specific to Fannie Mae loans. And what it does, it pulls all the different factors from your loan application, and it's going to give us a result. And it's going to tell us whether you are approved, eligible for Fannie Mae guidelines, or if you're ineligible. So what'll happen is if we find out that you're ineligible, it's going to give us a particular notification on the DU report. And that notification will let us know that you're eligible to consider your rent payment. So from that point, what'll happen is we will then have to get the borrower's permission, and they'll have to provide that permission to the bank. And then we'll use one of our credit providers to pull the information from the bank, verifying the rent payments have been made over the last 12 months. And then when we rerun DU, we can include that. It'll be included in the new report that our credit vendor provides to us. And then we can rerun the report. And what they're saying right now is that if you have a 12-month positive history, and as long as your rent payment that you put on the application matches up with what's showing in your bank account, coming from your bank account every month, then there's a really good chance that you're going to get approved going forward. So it's not exactly a guarantee, but it's just really good that they're going to actually consider that now, because like I said, you're making your rent payment on time. And oh, by the way, initially when we started this conversation, Qierre, you mentioned credit score, and I said, no, it's not about the credit score. Now I'm making that point for this reason. What they noticed, and this is why they're actually doing this, what they've noticed is your actual housing payment history is a bigger indicator on how successful you're going to be with the mortgage than your credit score. Why? Because your credit score is considering factors like what you're paying on your credit cards, what you pay on your car payment, things like that. But I mean, it only makes sense that if I'm going to give you a house and you have to pay on that house, don't I kind of want to know how you did paying on your last house or your last, housing, right? So it makes 100% sense because, that's cool if you pay your credit cards and keep them low and all that. But, I kind of want to know that. And there's no way to know that before. So yeah, that's the short end of it.
Yeah, I love that.
Yeah.
I mean, I definitely think it's definitely great to add that as a factor when it comes to evaluating a person or potential borrower for a loan to purchase a home. I mean, obviously, when it comes to rent, you are making sure to keep a roof over your head. So it does definitely make sense to apply that. So I'm definitely looking forward to seeing how that affects our clients as they come in and you're able to utilize their rent as a contributing factor. So thank you for sharing that. All right. Now we move on to topics. Topics. So, don't be a Dennis Schroeder. So, Wes, why don't you want to be this person? Just in case some people may not know who this Dennis Schroeder is.
Yeah, you definitely don't want to pull a Schroeder. And for those of us in Southern California, most of us are probably Laker fans. So you're probably familiar with this person. He was our starting point guard on last year's team. And what ended up happening was in the middle of the season, the Lakers offered him a 4-year contract and a starting position because he was the starting point guard at the time for $84 million. So $84 million over 4 years, right?
Wow.
If you're doing the math on that, that's $21 million a year, guaranteed for the next 4 years. Now, Mr. Schroeder decided, I guess, he was going to bet on himself. And so he elected not to sign that contract. And he decided to wait till the free agent market opened up. And he wanted to go into the free market. And obviously, he thought he could do better. Well, he ended up signing a 1-year deal worth $6 million. Yeah, 1-year deal worth $6 million. He's no longer backup. So he'll be backing up Marcus Smart with the Boston Celtics. Now, he's now going to have to bet on himself again because he's only got a 1-year contract. Now, the sad part is he's not going to have the amount of minutes or the opportunity, barring any injuries to Mr. Smart, that he would have had with the Lakers. So he's going to be playing for a new contract, but he's going to have less opportunity to show the value of his skill set, right? Now, one interesting thing that came up as I was talking to different people, friends and whatnot about the situation, I heard a lot of people saying he should fire his agent. I heard a lot of that. And I can be in agreement with you, but let me just tell you, as a professional who gets paid to advise people on how to move forward financially and how to make the best decision financially, the reality is his agent may have advised him to sign that deal with the Lakers. And he may have elected to just not listen to the agent and go his own way. So the lesson in this, and I'm going to bring it back to the mortgage and the real estate side of things, you have to understand leverage and you have to understand value, and you have to know when to rely on the professionals that you pay to advise you on those things. And when we talk about putting offers on homes and we talk about, what you're putting in the offer and things like that, you got to understand leverage. You got to understand where the market is at that time. And you got to understand, value and whatnot, right? Because I'm telling you right now, this market, and I'm sure you'd agree, Qierre, this is not the market to go in guns blazing saying, we're offering you, your asking price or 5,000 below your asking price, and we want all our closing costs paid for. right? This is not the market to do that. And also listen to your professional. Listen to your professional. Because the thing about the professional, and here's the important part, the reason when, I don't make my own individual decisions about stocks to invest in, you know why? Because it's my money and I'm emotionally attached to my money. And you don't want to make decisions about your money based on emotion. You want someone who's not emotionally attached to the situation, not emotionally attached to your money, that's advising you on how to move forward based on reason and understanding and expertise. So, long story short, don't be a Schroeder.
Oh man, I love that. I love that life lesson. I love that life lesson. Don't be a Schroeder. Wow. All right. Now we move on to the jobs report. So Wes, what's been going on with the jobs report lately?
We have another update on jobless claims or whatever. And once again, the jobless claims were less than what we're expected. We were expecting to have 345,000 jobless claims. We only ended up with 340,000. So that could be a good thing. That could be a sign that things are opening up, people getting back to work, more jobs available. Now, you also have to kind of take it with a grain of salt because jobless claims can also be people who no longer qualify for additional unemployment. And remember, the additional unemployment support that was being provided, I think it just ran out or it's running out like within a week. They extended, I think it was like you were getting extra somewhere in the neighborhood of like 400 a week or something like that. And that's just about up as well. So we'll have to keep an eye on it, but it could be a good sign. And a lot of times it is a good sign. So there's that.
Perfect. I love that. I love that. Any other market updates you want to talk about?
There is. This is pretty big news. This is pretty exciting to me, and it should be exciting to all of you real estate professionals out there because it's an opportunity for us to help more people, and therefore it's an opportunity for us to also do better ourselves. So what's happening is the HUD, the Housing Urban Development, has unveiled a multi-agency affordable housing plan. Now, there's several key components of the plan that, like I said, could create a lot of opportunity for more people, more low-income people to be able to get into housing. So, number one, they've created the FHA 542C program, and what that does, it allows housing finance authority agencies to originate and underwrite affordable housing loans, including new construction, rehabilitation, refinancing, and housing for the elderly. So what that's going to do, that means creating, selling, and preserving, and this is the goal of the program, to create, sell, and preserve 100,000 affordable houses over the next 3 years. That's a lot of houses.
Yeah, absolutely.
Yeah, that's a lot. So the eligible borrowers for these programs are going to be investors, building developers, nonprofit corporations, and they can apply through different HFAs. Those are housing finance authorities, and those are the organizations that are usually providing like the down payment assistance programs and things like that. So you're going to have people basically financing, building these affordable houses, working with FHA organizations, probably to assist. Some of it, of course, will probably be rentals. But if you're going and dealing with an FHA, a lot of that is probably going to lead to home sales, which is a good thing, right? They're also going to be raising the equity cap for low-income housing tax credits for both Fannie Mae and Freddie Mac. So that's going to take it from 500 million to 850 million, which means there's going to be more incentives for them to create more housing opportunities as well. And as we just talked about in our last segment, they are the ones who are creating these guidelines for financing. They're the ones who are investing in a lot of these loans. So that's a good thing. They'll also be providing state and local governments aid to boost housing supply to reduce exclusionary zoning. So if you don't know what exclusionary zoning means, that means you have particular areas or pockets in a particular neighborhood or area where certain types of properties are not allowed. So they're going to be providing assistance to make those types of properties allowed in those particular areas. Because as my friend used to tell me, God ain't making any more land. We got what we got, right? So if you can expand into other areas, create more housing, create more opportunities for people to buy housing in those areas, that's a great thing. And then lastly, the Federal Housing Finance Authority will also be making sure there's more funding available to community development finance institutions. So these community development finance institutions, those are some of the organizations where maybe some of you have heard of this, where they basically buy affordable housing in particular areas, and only certain people can qualify to buy those homes, only certain low income individuals. Just to give an example, I knew there was a particular development in Huntington Beach once upon a time where they had something set up like that. And I've known a few different places throughout Southern California or Orange County specifically that have that. I think that's where you kind of find Homes for Humanity kind of fits into that.
Yeah, it does.
Yeah. Yeah. So basically, like I said, they're creating a lot of opportunities to create more housing opportunities for low income individuals to be able to buy houses. So I think that's a good thing.
Absolutely. It's always a good thing to make homes more affordable. I mean, the fact that there will be more affordable homes, that means that we'll be able to create more homeowners. So that's always a great thing. So thank you for sharing
Absolutely.
that. Now we move on to one of my favorite segments of our show, the West Files. All right. So the West Files. Give me what I'm asking for. I'm gonna let Wes talk more about why did Qierre just say, "Give me what I'm asking for."
Yeah. So, this is the portion of the show where I always try to take my personal experiences with working with home buyers, either through the pre-approval process or the actual home buying process. And there are lessons that I learn and ways in which I grow that I can share with you to make things easier for you and things you can learn from it as well. So the reason Qierre was saying that is that, as I like to say, once you're in escrow, the negotiating part is kind of over, right? Now, not as far as the real estate thing goes, but you're used to when you're in the process of buying the home or getting into escrow, there's a lot of negotiation. There's a lot of back and forth. There's, offers, counter offers, counter offers. That's all going on at that point in the process. Once you are in escrow, now we have this thing, which is the loan. And we have to make sure that that thing happens and that it happens on time, because everybody in the process is expecting that it will. That's why we have our terms for escrow. So if you have a 30-day escrow, guys, guess what that means? You are expected to pull up at the station in 30 days, ready to go with loan in hand. So one of the ways in which I watch borrowers get frustrated is when we're in the escrow process, once we submit your loan to underwriting, the underwriter is going to give us what's called a conditional approval. Why is it a conditional approval? Because it is an approval with conditions. Now, those conditions are usually based on additional documents that are required to verify assets, income, and credit, right? And they're operating based on guidelines provided by, and I just talked about it again in the last segment, Fannie, Freddie, or if we're talking about government loans, it would be Veterans Administration, or it'd be the Federal Housing Administration, or the USDA. They're going by their guidelines. So they're collecting all the documents to be able to verify that you qualify for the loan. And not only that you qualify for the loan, but that you qualify for the loan based on their guidelines. Now I'm going to give you some industry insider knowledge right now. This is why the lenders are so invested in making sure that they cross all the T's and dot all the I's. Because at any point after they fund your loan, let's say Fannie buys it, they buy that portfolio of mortgages, your loan is in that mortgage or your loan is in that portfolio. If they decide to do a random audit for any reason, any day of the week, and there are documents missing, they can make that lender buy that loan back and put it back on their portfolio at any point in time. And the reason lenders don't want that is because how you work as a lender, you have a credit line or what we call a warehouse line. So let's say hypothetically, you have 300 million on your warehouse line. Well, guess what, guys? You can fund 300 million in loans. And until you sell those loans, you have no more money to lend out. You have no more money to give. So the idea is to fund a loan, sell a loan, fund a loan, sell a loan. That's what keeps you in business. You keep having more money to give out based on the credit line, and you don't deal with those mortgages anymore. So I don't want any mortgages taking up space on my warehouse line because that's one more loan I can't fund. So when you picture the underwriter, guys, I'm going to make this really simple for you. When you picture the underwriter, I want you to think of the IRS auditor that you've been fearing in your sleep. Imagine that person, or better yet, imagine Agent Smith from The Matrix. That is the underwriter, okay? So I said all that to say this. When an underwriter asks for something, that's what they want. That's it. You know what I'm saying? If they tell you to hop on one leg 5 times and say the alphabet backwards, that's what you do. You don't say, oh, can I hop 4 times? Oh man, can I say half the alphabet backwards? No, that's what it is. Now, here's the important thing. When you're working with a knowledgeable loan officer, a skilled loan officer, when those conditions come across, if they're familiar with the guidelines like I am, I'll fight for you. And I'll say, hey, we don't need that because per the guidelines, we need this. Now, here's the thing. I'm going to do all of that before I bring it to you. So once I bring it to you, that's it. Negotiation is over. The auction is closed. We got to give them what they want. And I'm just going to say this one last thing, because when I hear people, that are frustrated with the process, they'll say, man, why do I have to jump through all these hoops? And why can't they just take this? My only answer to that is this. You have someone about to give you 6 figures, and in some cases, 7 or 8 figures in free money, or not free money, but money, right? They don't know you from Adam. They don't know you. You know what I mean? Because a lot of times I'll have people tell me how great they are. And man, I wouldn't lie about that. And that's cool, but they don't know you. And if the tables were turned, would you lend you money without collecting all that, as much information as possible? Because I don't know about you. I got family and friends that wouldn't lend people $5 if they didn't check them out properly.
Right.
So it's the same thing with the lender. So rather than getting yourself all worked up and frustrated, just do what's being asked of you. Don't try to negotiate. Like I said, your loan officer should have already done that for you. Just give the people what they want. That's all you got to do. That's it. Agent Smith does not negotiate. He doesn't negotiate.
Love it. Love it. All right. Now we move on to City Spotlight. So we're going to talk about the city of Los Alamitos. Now, we're
LA? LA? In the city of LA?
Los Alamitos?
Yeah, that's right. The city of LA. That's what Tupac was talking about. In
What?
California Dream. Yeah, he was talking about the city of LA. He was talking about Los Alamitos. Oh, you thought he was talking about Los Angeles? Nah.
Yeah, everybody else did.
No.
Yes. In the city of Los Alamitos.
There you go.
Sure. We'll go with that. But not really. But anyway. All right. So, city of Los Alamitos. So, I'm going to give you some numbers and data, and Wes is going to tell you all the fun stuff. This is the part where we actually like to switch. So, city of Los Alamitos. The city of Los Alamitos was incorporated in March 1960. Currently, in terms of the city of Los Alamitos, there's about 33 active homes available for sale in the city of Los Alamitos, which happens to be one of the higher numbers that we've seen, with our city spotlights. Average days on market is about 30 days, meaning that it takes about 30 days for a home to come on the market, then for it to get into escrow. And that's a little longer than what we normally have seen. Now, the average list price for the city of Los Alamitos is about $1.2 million. That may be why homes have been on the market a little longer than most. The average income in the city of Los Alamitos is about 102,000. And now I'm gonna let Wes share some fun stuff that you can do in the city of Los Alamitos.
Yeah. So where do we begin? So for starters, they have a spring carnival. They have the race for Los Al, which, a lot of these cities have the street fit, or they have the 5K, 10Ks going on. This one is a little different, and it sounds like more fun, frankly. So number one, they start with a street fair, which is cool. They also have the glow in the dark run.
Oh,
and
that's awesome.
yeah, and that's basically after dark. You put on your neon trinkets and everything like that. Pretend like it's back in the 90s and you're going to your favorite rave. And we're just gonna run, get a little exercise in. Now, in addition to that, the glow in the dark race, they also have what they call the groove and glide. Usually in most 5 to 10Ks, they tell you can run or walk or whatever. What about one where you get to roller skate too?
Yeah, that's awesome. I love that.
Yeah, just put on some roller blades and go.
Yeah.
So that's the race for Los Al. They have a health and fitness expo. None of the other cities have that so far, so that's pretty cool. They have a weekend of art, which is a lot like the Pageant of the Masters, which is held in Laguna Beach. So it's visual and performance art. They also have the 4th of July fireworks spectacular. They have the music and movies events, which are, held in public parks. They have a Halloween celebration, Winter Wonderland. They have a holiday decorating contest. So they have several neighborhoods throughout the city, and they're going to drive through all those neighborhoods and choose who has the best lights, and you win prizes for that. So if your name is Clark Griswold, this might be something you'd be interested in. And then lastly, they have the Los Alamitos School District. That's where your kids would be going. The feature is Los Alamitos High School, which I haven't kept up with their football program, recently. But when I was in school, they were like, they were top notch. It was like modern day and Los Alamitos when we talked about Orange County. So, yeah.
Awesome. Yeah, well, definitely thank you for sharing some great information about the city of Los Alamitos. So thank you for that. And if you guys have any questions about buying and selling or investing in the city of Los Alamitos, definitely feel free to reach out to us. We'd be more than happy to help you with all your real estate needs. Now, we move on to the last segment of the show, which is called In the News. So, Wes, obviously things have been happening in the news. Tropical storm Ida, some sports news that I know you want to talk more about. So Wes, where do you want to get started at?
Oh man, let's start with the bad news first. So as you know, we had Hurricane Ida, which was later downgraded to Tropical Storm Ida. I don't want to see either Ida. And let me just say, heart goes out to everybody that's dealing with it. I'm glad I'm in California, not having to deal with that. You hear about power being knocked out in New Orleans or throughout, parts of different parishes in Louisiana. And then it made its way to the Northeast.
Yeah.
Wow. Yeah. And I'm seeing pictures of I saw a Planet Fitness yesterday where all of the equipment was underwater. Like, how's that even possible? Just crazy. So, like I said, heart goes out to everyone dealing with that particular situation. And I will just say this: if you're donating like I have, try to find, verifiable sources to donate to, and make sure that you check them out and make sure that they're, like I said, verifiable sources where the people who need the help are going to get the money, the majority of the money. Not some situation where they have like a CEO making like 80% of the money managing, the donations, and then the other 20% goes to the people who need help. So
Yeah, absolutely. That's definitely great advice for sure. And in Keller Williams, we've established our fund that we've been donating to, so we've been helping victims of the hurricane or tropical storm Ida. So that's definitely something we're doing with Keller Care. So we've been doing that as well. And also, like you said, if people out there that want to donate, definitely verify the sources. Every GoFundMe page is not created equal. So, definitely make sure that you're verifying the sources. So thank you for that. All right. Now we move on.
All right. So big news in the NFL. Cam Newton got cut by the New England Patriots out of nowhere. Just bye, Cam. Goodbye. So no one's picked him up as of yet. I'm kind of hoping my Cowboys do. He'd be a great backup. And that means that the Patriots have every bit of confidence in Mac Jones. Their 15th overall pick that they picked up from Alabama. And, he came from a similar type of coach and coaching style of Nick Saban, very similar to Bill Belichick, the friends and all that. So my guess is he fit right in there, and they just decided, you know what? It's time to rip the Band-Aid off. We don't want another mediocre season with, someone who's sure to be a Hall of Famer, but obviously on the back end of their career. So they just got rid of him before the season started. Now, I knew at some point Mac Jones was going to start. I was thinking they would probably somewhere around game 3, 4, put him in by then, let him get accustomed to the game speed and all that. Because one thing to remember about the preseason, even though it is NFL football, a lot of the teams that you're playing or going up against, they're not playing their starters. And if they are playing their starters, they're playing maybe 1 or 2 series. And then on top of that, they're using a reduced playbook. So you're not even seeing, all the bells and whistles. You're seeing a very vanilla defense and things like that. So I thought they would let him get into the regular season, but they're like, nope, Cam got to go.
Yeah. Well, it must be showing something out and during practice to make them definitely feel so confident about that. So obviously, we definitely hope, team does pick up Cam Newton. He's a great quarterback. So hopefully, team definitely does pick him up. So we'll see how happens.
Yeah.
With that. So.
Somebody will get him. Come on, Cowboys. Come on, Jerry. Come on, Jerry. Don't let me down. And then lastly, we have the up and coming recall election for the governor of California. All votes have to be in by September 14th, which is only 11 days away now. And current polling shows that Newsom is basically sitting comfortable. Right now, the polling shows that 58% of people are going to vote no. Only 39% of people are going to vote yes. Now, take that polling with a grain of salt. The polls have been wrong before, but that's what they're showing right now. And then, of course, the leading Republican candidate, should the recall happen, is none other than Larry Elder. Compton's own Larry Elder.
They say that the sage of South Central.
Yeah. Yes.
So it'll be interesting, whatever does occur. So we'll definitely keep you guys tuned into that.
Yeah, one way or the other, and I'm all for the democratic process and all that. It's just a shame though, because once I found out, even if Elders gets in there, we have another election next year, and we're wasting somewhere in the neighborhood of like $250 million to have the recall election. Like, wow. But the people have spoken.
People have spoken, so we'll definitely keep you guys tuned in and see what happens in the California recall race and all that good information. And again, remember to subscribe. Remember to click that notification bell so you guys are notified. And guess what? You can share this with your friends. Share this with your friends and your family, your coworkers. You know, get the word out there that we are providing great information and all that great stuff. So until next time, see you guys on the next episode.